Yeah, no, it's a good one, and it kind of it encapsulates. I'm not sure if that's a word. Captures the theme, I guess, of markets right now. Right, you have a pound, which is a bit of a more risk-on type currency, versus the yen, which is obviously a risk-off currency. People flock to the yen in times of uncertainty, and there is certainly no. If there's one thing certain right now, it's uncertainty is very high. And so, pound yen, interesting chart here, as you mentioned, kind of on the daily chart, putting in maybe another lower high here, and very curious to see how that plays out. Again, if you do see follow through on the indices to the downside, there's a very strong probability that pound yen would move to the downside with that. So, very nice. Marco, what about you? Chart of the day, most convicted idea at this time.
Yeah, so for me, it'll be the euro dollar and the pound dollar. But just before that, I want to briefly mention, I know a lot of people are panicking because of all tariffs, and everyone is, at least online and in person, extremely negative about it. But what you have to look at is that the truth is somewhere in the middle, as always. Because my brother and I did the calculations, and if you want to buy a BMW, the same car, the same spec will cost you around the same money in euros in Croatia, which is in European Union, and in the States. But if you want to buy a Ford Mustang with a V8 engine, it's going to be around 24% more expensive in Europe compared to the States, and that is before all the crazy taxes that we pay. So there is some, let's say, weight to what Trump is doing, but of course the truth is somewhere in the middle, and I do think all the numbers from the big board are a bit exaggerated, if you ask me. So very, very interesting about that. Now, in terms of the charts, I would say, euro dollar, pound dollar, those are the ones showing me a lot of momentum, giving a bullish reading on the edge finder as well. Gold is bullish on the edge finder also, but technically it looks a bit broken on this 1 hour chart. So what I would look for is some nice continuations on these charts, like a flag formation, or maybe some sort of a push up and then a pullback, break and retest. Yeah, they do seem a kind of extended, you could say that. But again, for my, let's say, OG strategy, I'm looking for these large momentum moves, unexpected market conditions, and that is what I really like to see, and that is what I count on continuing for the future. So yeah, that's the play for me.
Marco, that's a great point in terms of, like you said, a broken chart. It brings me back to something I was discussing a few minutes ago, just before you guys joined. Somebody asked me recently, they said, Nick, what do you do in a market environment shift? And I think that's maybe important for all of us to think about, for everybody listening to this podcast or this stream, and everybody who's, active trader. You have to think about, like, okay, what do you do when the VIX does this, right? At the end of the day, because the VIX is something that unifies all of us, whether you trade Forex, indices, it doesn't matter. This is just a reflection of market sentiment to an ultimate degree. When the VIX is flying high, people are really uncertain. And currencies move a lot. Currencies moving like crazy right now, more than they have in some time. Gold's moving a ton. Indices are moving a ton. Everything is moving. And you have to have a plan in place before that occurs, otherwise you can get wiped out. How many traders have thought they were a hero when the VIX was low and markets, are mostly relaxed, and then they get absolutely blown out of the water when the market environment shifts? And don't even get me started on these August, 5th major, movements higher than the VIX. Point is, we kind of have to be thinking about that. And for me personally, I'll just give you an answer. Somebody asked me this recently in my comment section. I thought it was a good question. They said, Nick, you mostly trade indices on the long side. What do you do in this environment? And the answer for me is, because I trade a wide range of things, and I know all three of us do, I actually just shift my focus. Like, although I'm still going to watch the indices all the time, I'm not trading these because, again, I like certain environments for indices, low volatility, uptrends. I love that, right? I love kind of trading that with a trailing stop. But when it's moving to the downside, I don't really like to short. We talked about this a lot on the streams. Sell-offs are very sharp, but then so are the bounce backs. Sharp bounce, it's very difficult for my style of trading to trail a stop, because usually sell-offs are very sharp and short-lived. And I mean, they can go way deeper than you think, but they're usually not very, very long, unless you enter into a true bear market, which, some people would argue maybe we're headed towards. But I'm curious with you guys, kind of same principle applies. You get a huge spike in volatility. Marco, how do you adjust for that? Do you change anything with what you're doing, or do you simply just shift your focus on what you're trading or looking at, or do you really change nothing?
Yeah, so for me, of course, I have recently started to trade indices with fundamentals, of course. So when the volatility is extremely high, it's connected to dropping price in indices and stocks, which is something I don't really want to get involved in. So the goal is to long-term go long on the indices. But for my, let's say, OG strategy on Forex, volatility is pretty good. So what is happening now since the tariffs have been announced is what I like to see in Forex there. So a lot of momentum, a lot of follow through, a lot of movement in one direction. So I would say I have the same opinion. So volatility up, stocks are a no-go, but Forex is a pretty good market to go into. Yeah, in terms of gold, again, in this specific scenario, fundamentally foolish, but yeah, just a lot of selling pressure right here. I would need to see some cleaner price action, more steady uptrend such as we got in the last few weeks. So I think Forex is a very good play when the volatility goes up.
And actually, in 2022, I had a really tough trading year. I've talked about that a lot of times on the indices and gold side of things. But currencies, that was one of my best years ever. That high volatility, especially, what's really nice about volatility, it's a double-edged sword. But let's say you're trading the euro, and I've got a good trade on the euro right now, a trade that's taken off here in my direction. What I love about that high conviction or that high volatility is that when you're on the right side of it, you can very quickly capture some really nice movements. So same question to you, Nico. You get a high volatility environment. Obviously, you're focused mostly on Forex, but trade little metals. How do you play that environment, and do you typically like or dislike this type of movement that we're seeing?
Yeah, I would say I like it similar to Marco when, especially in FX, when we don't really have a lot of movement, that's a lot of times where it can easily get chopped up and lose
Yes.
money. If there is clear direction and I can see that direction, it's either one or two things. You're either looking to go against that and pull the tops or the bottoms, or you're looking to follow that way for pullbacks. And for me, it's mostly looking for pullbacks. So when I can get some clarity and direction, it's not looking too choppy, then that's actually when my eyes light up a little bit and I've got some clarity with what I'm looking to do. So generally speaking, if there's a lot of momentum, especially in one direction, that's a good thing for me.
Yeah, fair enough. It's double-edged sword as always with volatility, right? You get the big moves up, big moves down, and clearly with this amount of volatility, you're seeing just everything on the move. Take a look at the Nasdaq down 1.4% here today. S&P's down 1.5. Marky, you talked a little bit about how applying a simple filter of kind of downtrends and uptrends could kind of help with watching the indices. I'm curious your thoughts. A lot of people are watching these, they're looking at gold. What are your thoughts on indices right now?
Mm-hmm. So for indices, best to look at them on the daily. Well, we are continuing with the downtrend, and it makes sense with volatility going up. So in the best trading books I read, it says, look, when volatility is going up, don't go long stocks. I mean, if volatility is going up and stocks are going up, something is completely broken. So I think Wix is a great chart to see if the stock market is kind of recovering, or should we be really careful. As you said, Wix is going up, which means probably this thing would go much lower. We broke this key level as well on the S&P. I think on Nasdaq we broke it a while ago. Yeah, we did. So the daily chart is closing bearish as we speak. I'm bearish on the indices for right now. Is this doomsday? Well, if we look at let's say the monthly chart, I would say this correction is still, it's pretty much nothing. So this can go a lot lower, and then it would be very concerned. But if you look at the grand scheme of things, this is again a small correction. So corrections are what happens in the markets. You cannot get a straight line to the upside like this. So follow that path if you're smart.
Yeah, I mean, it's a great point. And then, unfortunately so for a lot of people in these types of moves, if you go into these moves with a lot of leverage, like I know, we're talking about, there's all sorts of people that watch these streams. There's people who are traders, swing traders, day traders, scalpers, investors, position traders, it's a little bit of everybody. If you go into a position or into a time like this with a lot of leverage and a lot of, all-out bullishness, that is a really dangerous thing that a lot of people play with the indices and with gold and everything that, tends to float up is people kind of take a good thing and they turn it into a bad thing. They take like, okay, stocks typically grow, economies grow around the world. Over the long term, things typically, progress. But then what they do is they make that into a bad thing. They go super leveraged. They go, taking massive risks in this market because they believe that can't change. And as you pointed out, we're seeing now finally a proper pullback in the stock market. We haven't had a movement like this in quite some time. We had the August move, but it very quickly faded back towards those highs. So yeah, I mean, it's something to think about. Miko, what about yourself? When we look at indices, bullish, bearish, neutral, what do you think?
Yeah, so it's not looking too great for indices at the moment. The key takeaway for me is that the market's now putting in lower lows and lower highs on the daily chart, so now actually trending bearish, breaking through structure. So I do think there's more downside to be had. Again, as to where I'm kind of looking at the higher time frames, weekly, even monthly charts to kind of gauge areas which could pull back into. I think the S&P, there's a brief pause in here around July last year. I feel like that could be an area which we might start to find support, but it is a situation we kind of have to gauge the market as it's going along. But yeah, the key takeaway is the lower highs are being printed. We respect the 200 very well on the daily chart as well, and especially yesterday's candle, big wick to the upside, convincing close to the downside, and now looks like we're breaking support. So with this one, if you're kind of intraday, I'll be focused on some smaller pullbacks with this one if you're interested in shorting the market. And yeah, if you're looking to go long, I think stay in hand, sit on your hands for a little bit longer.
Yeah, and I guess while you've got the screen, Miko, what are your thoughts on the metals here too? So obviously indices, really rough start here to the last, really the last, total year. Giving back a lot of gains here, but same with the indices. You look at, the metals, right? You've got gold and silver getting pretty hit hard today.
Yeah.
Gold down 2%, silver down almost 6%. That's a crazy downside move for silver. What are your thoughts on these metals? Are these pullback opportunities, or do they look broken as well?
It's interesting because I've been focused on silver quite a lot. I was actually in a trade with this one, but I did get trailed out to break even Monday, I think. But yeah, I was looking at silver this morning. It was looking very bearish. I was like, okay, is this another opportunity to buy silver again? Probably. I'm looking at this level here, which is around 32.3 roughly, and this was going to be the level which I looked to buy from, and it still is. The daily candle's still got about 8 hours left before it does close, but I do not want to see the daily candle close below this. That's a bit more of a bearish signal to me. My thinking was the market's still pretty consistent with these high lows. If price can give me some indication of a high low forward there, wings projection, I'll be happy to try and have a stab at things. If we do break through that on the daily chart, then I would back away. Still very much long term bullish, but maybe price is just really struggling to break resistance here. We're going to have a deeper pullback. In terms of gold, gold's coming down pretty hard as well. I think that's just kind of healthy for gold, to be honest. It's been so bullish. So maybe now's the time to have a bit of a breather. This is our first area of interest for gold. I'll look to see what we can do here. Around 30.50, that looks like a nice place for a buy for me. And also, prior high here too, if gold really wants to sell around 3K, that's pretty nice. So I'm still very much a bull on both of these markets, but being careful. Momentum could just keep bleeding, so you need to kind of judge that as well. But yeah, silver's kind of where my focus is, and that level of support does need to hold. If we end up cracking that on the daily, I think I'll just sit on the sidelines and just see how price
for the traders out there that are watching gold right now, especially, I think that this is just an eye-opening day in the sense that, look, a lot of people were very, very frustrated by the market going up every day for gold, and now that it's coming down, this is either one of two things. If you're somebody who is bullish, your patience is being, you're very thankful to not have chased, and if you were impatient, you're probably learning a hard lesson right now. Gold can sharply drop. It can give back, just like indices, right? Gold, silver, these things can drop very, very aggressively. And so patience pays off big time in these types of upward trends. It's really hard to watch something go up every day and to not be a part of it. I'm very aware. I've been caught on FOMO more times than I wish that I ever could have imagined, right? It's part of the trading journey. But right now, a lot of people are probably learning the lessons of chasing, or if you have been on the sidelines for gold, you're like, wow, look how much we gave back so quickly. And as you mentioned, momentum here in the short run seems to be favoring the bears. This is a move of, from peak to trough of 3.3%. If we were to have one more day move the same way, we're back below 3,000. So just as an example, right, if you were to follow through and do the same distance from high to low here again, just goes to show how quickly a market can turn and how violent it can be when it does. So I just think that, again, people who learn hard lessons, you can either get frustrated and call trading a scam, or you can just learn, like, look, you can't chase, you have to be patient. Markets eventually kind of recalibrate, and we all kind of knew gold was overbought. Now, again, I will not claim to have said, oh, I think gold is going to sell off today. I didn't call that, but we all kind of knew, like, look, metals are stretched. They have some room to pull back and still be bullish. So, I don't know. Same question to you, Marco. Is this chart broken, or is gold, possibly pulling back to some key levels?
Yeah, so let's go to the daily chart. I think this actually looks pretty good on the daily. So we're approaching this sort of support level, and if we can maybe retrace a bit, print a bullish candle on the daily chart, that would be an opportunity for me personally to look for some buy setups. So what I would need to see is definitely some bullish momentum to kick in. Again, we can maybe consolidate around here and then start to trend up, at which point I will be looking for buy setups if it's in line with the edge finder. So I'm not deleting gold from the watch list, but I need to see this momentum stop. So I need to see the selling pressure stop, give me some buying pressure, and then I will be pretty happy to look for buy setups, because we have then approached this support level on the daily chart, and we have corrected a bit, which is nice, so we are not overextended. That is kind of the story that I like. And also I wanted to mention, so with my colleagues today, I went through my textbook. They have a bias. They show you, is the retail long or short? And it was very cool to see that retail was like 80% short on the euro dollar in the last couple of weeks. Like, they were extremely short. So retail really likes to fade moves, and of course they have probably lost a lot of money in this huge pop to the upside. But that's a great indicator that I saw in my textbook, because they have all of these retail brokers connected to their platform, and they can see how many positions are going long and how many are going short. And we back tested the chart a bit, and we saw that there was an extremely good correlation between the retail being really short and the market exploding up. So that's something that was really cool to see, and it's in the edge finder as well. Again, a great confluence for your trading.
Yeah, I was looking at that just as you mentioned it. You've got euro dollar, pound dollar here. These are some of the extreme readings here in terms of sentiment. I mean, it's amazing to me too. This is, we all got on here, all three of us. We look at indices and we're like, oh, that is ugly price action. So I don't want to say that, we're wrong for thinking that way, because I think a lot of people are bearish in the indices, and I actually think that short term price action still does look bearish. But there is the ultimate test. You mentioned the test that you guys just did, Marco. One thing that I found through tests and through other people who have done similar tests, and I encourage listeners to go do this research for yourself. This indicator right here, sentiment survey has, in the past, only a few times gotten this bearish. Look at this, 62%. It just got more bearish. So the reason I bring this up is that historically, when you get these types of readings, 12 months later, 6 months later, and like 3 months later, almost every single time, the market is higher. And the reason I say that is like, what people tend to do is they tend to like sell aggressively all at once and flush out all the selling. And then it kind of like bottoms out and rips higher. It's like an interesting phenomenon because again, it's so hard to think about buying the indices at this time. Probably everybody in this, you know, from a short-term perspective, right? From a long-term perspective, I think most people are like, oh, yeah, you probably picked up some good stocks at the low, and in 5 years they'll probably be up. But you know, from a short-term trading perspective, this makes me very, very interested in looking for signs of price action bottoming out. I can't say that I'm looking to actively buy the indices, but when you get this extreme sentiment, it does, you know, make me curious. Miko, what do you think about sentiment indicators? Do you use any of them in your own trading? Do you consider them, you know, when you have crowd sentiment going one way? What do you think?
I don't really look at them too much, but I can kind of gauge when the market is retail are very long or short. Typically,
Yeah.
any market that is gone up for a while, people look to sell. Any market that's gone down for a while, looking to buy. And especially in pullbacks as well, because I kind of want the pullback to be a little bit deeper than maybe you would expect it to be, because that's kind of where people are getting long, and then maybe their exit gets knocked down a little bit, and the market potentially moves. So I don't really look at it a lot, but I can kind of gauge when the market is people are looking to sell a lot or buy a lot, and I tend to try and get in late, but it's not something I actively have to have in my favor.
Sure. Yeah, no, that's a fair conclusion. And yeah, after looking at charts and then sentiment so frequently, you can almost spot it. It's almost like if you see a chart that's, I could tell you with, I would say, and most of you guys are probably the same, probably 90% accuracy, like if retail is net long or net short on a certain currency pair, just based on what the